Yo, Tickles, what's up, man? Wesley, what up, my dude? Hassan, what's up, man? Ahern, Devin, Dan the man, what is good? Anomaly, yo, Austin, let's get it. What's up? Joe, Echo, what is up, man? How you guys doing? How's the squad doing? How's the squad doing? Liana, what's up? Josh. What up, Champagne Poppy? Professor, what up, dude? Oh, man, just chilling, man, on this fucking lovely Sunday afternoon. Right? What up, trading? Momentum. Love God and neighbor, what is good? Yeah, guys, we're here, man, on a Sunday afternoon, 9 p.m., and we're gonna look at the charts, man. We are gonna look at the charts. Yeah, I don't have myself on the screen right now. We'll get that on tomorrow for sure on stream. I'm gonna be streaming. All right, tomorrow for sure. Yeah, let's look at the charts. Let's look at the charts. Ask away if you have any questions. I'm gonna cover AMC. We're gonna play some dope music. Chill it out. There's nothing going on right now in the markets except the fact that Bitcoin is crashing, right? Freaking Bitcoin, right? What is good, man? No, it's not crashing, but it is going to find a low, I think. We are looking at 22,000, and then after that, 17,000 from this dip. I don't think we're going to stop anytime soon. This is not going to be a... You're not gonna get a quick spring like the last 20. We had 25,373. Yeah, we're about to cross that right now, actually. So yeah, I'm looking at 22,000 for Bitcoin first, and then 17,000 is going to be the next level. And that will be a bottom, bro. That will be a bottom and a spring to the fucking moon, baby. All right, let's see. What do you think of the cost to borrow being so high? Many people seem to be hyped about this. Yeah, so if you guys follow me on Twitter, I did post about the cost to borrow, and I had mentioned, okay, that we do need to take that data pretty lightly just because, you know, like back here, okay, there was a post that I made. I don't know if I still have it on where I could maybe put it on the screen. Let me see if I can pull it up here, because that is pretty important. Let me see if I can get it on here. Okay, so yeah, and so the cost to borrow is important, but not as important as you think, and I'll explain why. Let me just pull up this picture. Okay, so I'm going to pull up a separate tab here so you guys can see it online. All right, let's pull it up here. All right, let's see if this works. Yeah, it should work. Okay, so guys, this is coming up right quick here on the screen. What is up, guys? How we doing? There we go. All right, so yeah, I'm just gonna briefly pull this up here on the screen. You guys can see this. This is a tweet that I made here a little while ago, probably last week, and you guys can see right off the bat. So the chart on top is the current chart. Obviously, the chart on the bottom is the chart from January to the June run up that we had. Okay, past 70, or at 77, and the numbers that you're looking at. Okay, they're highlighted on different shades, right? From white to green to like really dark green, depending on how high that cost to borrow is or was at the time. And you can see, like, right off the bat, we started off around April 19th of 2021 at 0. And it started to climb slowly, right? 18, 16, 11%. Then it went pretty heavy, like 48. We were at a bottom there, though. 48%, 89. And then we had the projector pattern play out, okay? So right after the projector, however, the cost to borrow dipped, and it dipped to 7%, then 5%, and then we ran to $77. So, you know, it's a bit misleading, right? Like, we don't need to have the highest cost to borrow for us to run up. In fact, what's going to happen is we're probably going to get a higher cost to borrow in the short term, create that projector pattern, and then we're going to dip again, right? Because that's what projector patterns do. Come up, come back down, and then we're going to establish that level of support on the trend line. Cost to borrow is going to dip, and then we're going to run. So it's pretty misleading, but it is something we're going to track, right? I think either way, it's important to track it. We just have to be careful with, you know, high cost to borrow, low cost to borrow, and sort of consider that, right, with the price action. Sure. All right. What is up, guys? Wesley. Yes, it should follow with the July point of interest. Let's pull that up real quick. Okay, let's see. Where is it? AMC. All right. Oh, God. Look at this chart, man. It's a mess. So much going on. Okay, yeah, so let's talk about that first point of interest real quick. If you haven't seen the video I just posted, it kind of goes over the entire thing. I'll cover it real quick, but what I'm looking at for this week is, well, the market just hit a pretty nasty dip following Thursday and Friday last week. So I am expecting a continuation of a downtrend in the market. Okay, I do see the SPY potentially hitting the, if not double bottom at 380. If it crosses 380, I see it going straight to 374. And I believe that will be that bottom. I don't see it dipping after that. I could be wrong, right? But based on fib levels as well as, you know, cycle tracking and patterns that I've been looking at, I don't see it going past that level, and I do see a nasty spring, like it's a bear trap basically, that I'm looking at for next week. I am looking at a bear trap, but I do think that Monday, going into Monday, if we get that dip early on and we start climbing up via reversal, we are going to see that going into Tuesday, Wednesday, Thursday, right? Because it is quad witching week. Quad witching week is huge, guys. You have to consider that with quadruple witching dates, okay, there's a lot of contracts that are expiring, both in the money and out of the money, right? There could be calls and puts. Depending on, you know, what hedge funds are over leveraged on certain positions, you have a lot of volatility in the markets. So I'm expecting this week to be pretty insane. And that goes with AMC, that goes with all of the stocks that we're tracking right now, okay? Realistic, $15 price target for this week. So I personally, okay, so I'm going to show you guys here what I'm looking at for this week. Hold up. Here, 1 second. Let's pull up the candle chart. Okay, here we go. And I will be posting that weekly scenario on the website soon, guys, okay? Also, I did add a cycle tracker tab. It is a premium option for the website, so if you click on it, it'll take you straight to Patreon. And there I will be having updates every single day on the cycles, the different cycles that are tracking against AMC. There's going to be option strategies. And there will be, what I'm doing right now basically is a Q&A on Sundays, but I will be providing that more on a personal level for that Patreon. So if you guys want to do that and check it out, make sure you click the link below on tradingwithemotions.com. Okay, so I did have some questions on what my thoughts were for the beginning of the week here, and we do have this level of support down here that hasn't been touched, right? We're just hovering right over. We actually have a little parallel. I like to do these little parallel channels down here. Here. Bro, these guys, this is exactly what we did prior to the break of this projector pattern. We had a parallel channel acting like as a little support trend line. Bro, I always lose these. Here we go. 1, 2. There we go. So what this does is, well, oh, damn. It gives you multiple ranges of support. So we have, obviously, this one down here, but we also have this guy. So you can see right here, the price tends to sort of stop for a second before making its way up, right, or down, this range. So that's exactly what we're doing right now. We're just on this range. You know, we could have a little George W. double bottom, right, potentially kick the week off and start going up. But again, since we have the SPY breaking lows and just dipping lower, you know, when it closes red, following a downtrend, you do see a continuation of that the next following trading day. So if the SPY does continue to dip, which I do think it will, we should see a little bit more downside. And I think that if we broke this first trend line here, we'd go straight down to 11, and here we would bounce. And I think, honestly, guys, just based on the current setup and the point of interest that we're tracking, it's very unlikely that we'll see another low. Like, this might have just been that low, and we just won't dip anymore. So we'll just kind of see, man. That again, this week is more of it's a heavy volatility week. The point of interest on AMC is not until the volatility zone is on the last week of June, or I'm sorry, not the last week, the third week. June is like super weird. It's got like fucking 5. Okay. Yeah, so on the 22nd is when I'm looking at that sort of $22 level that we're tracking. Again, guys, take this with a grain of salt, because it's, these points of interest, I'm tracking a level of volatility, a zone of volatility where the price is likely to increase or decrease very quickly. There's volatility in that zone. And just based on the current setup, that's how I come up with these points of interest, is looking at not only the technical setup that these guys are trying to play with, right? We look at levels, we look at the option chain, we look at the cycle, we look at a lot of different things, right? But not every time am I going to get it, right. So always consider every single option from every single angle that you can, right? Okay, so let me pull it up here. Where's the little path? So here's that first point of interest, okay? Again, this level right here, take it with I literally have not updated this in like 2 days. So this right here has the potential to come back up, sure. But again, with the market, what it was doing, I do see something like this instead. And then right here, you're going to get more of a climb. So if it comes back down, we would get a short-term sort of head and shoulders pattern, inverse head and shoulders, come back up here, establish this level of support first on the 17th, and then, or on the 16th, sorry, and then that's when basically things will kick off, right? Because if these guys are hedging for some option contracts here for quad witching, I think they're gonna take the opportunity, right, to basically short right at the beginning of the week, and then start to bring the price action to the upside, right, towards the end of the week, going into the following week. Typically, after quad witching weeks, you see a lot of volatility afterwards too. Since contracts have expired, okay, they will, new contracts open up also in the future. And that's kind of what I talk about in that video. That's very important, guys, with AMC, is that contracts open up on Thursdays, okay? They open up, and these are weeklies, okay? So let's look at the March 18th, March 17th contracts for 6 weeks, for 6 weeks after, right? Because they open up 6 weeks prior to the expiration date, meaning that here it would be around 48 days. So these contracts would open up for the May 6th expiration, right? So it's Thursdays, it's 1 day, it's plus 1 day. They open up on Thursdays and they expire the Friday 6 weeks after, right? And this is something to consider with the movements that are happening with AMC, because this is how they're able to hedge those positions when they typically, when these contracts open up, and I was talking about August here, because August doesn't have any contracts open right now, and that's important, because if these guys are going to sell those contracts here in the near future, you have to think, you kind of want that volatility to be on the upside, the higher side, and we happen to have this trend line right now that hasn't crossed, but could potentially bounce again. So if they bring the price action up here, okay, these contracts will not open up, okay, until the 23rd. And I'm sorry, this is going to be for August 5th right here. So these will not open up until this level, okay? Now, this has happened basically every single time here with AMC, as it comes up and down. When these contracts are open, there's high volatility. You could look at the option contract chart. Like, look at, I would look at the furthest options or the ones in the money to see how the price does fluctuate. And it's very, very interesting how that works. But you will typically see a chart, let's say that the August 5th contracts open up here, right? On this date, volatility's high. They sell those for, I don't know, like $5. This is just hypothetical. And the chart's going to look like this. They're going to open up. And then when the price comes down, obviously the contracts are going to decrease, right? In price. And what did they do there? They just collected a fuck ton of premiums there. And this is how they do it, guys. This is how they fucking hedge for those positions, those short-term contracts. And this sort of helps drive the price down and up, right? Depending on what these institutions are looking to do. So that is very important here for the next couple of days. We're going to get that here in the short term. And it would make a lot of sense for them to do something like this. All right. Questions? What is up? All right, let me read up on some of these guys. Milo, what's up, man? Thank you, brother. I appreciate it. Much love, man. I'm gonna go back here, see. So Wesley, I hope that answered your question too, man, on the August contracts, since they are opening, 6 weeks prior. Mats, what is good, brother? Stock, okay, let's see. Yeah, let's talk about that real quick. Trading momentum. You're talking about, did quad witching offer any value last year with AMC? And I do have a chart here on quad witching, so I'm gonna pull it up. Okay, this is a quad witching chart with a cycle curve. Okay, so what this does is this is an S curve that you can apply to the charts, and these are lined up. Okay, these are lined up at the top of the price before that quadruple witching date. Okay, so you can see right off the bat that this started way back here. Okay, this was the quadruple witching on March of 2021. Okay, and you can see it right. So we start off on the high, and this creates an S curve. It creates a basically a cycle curve. And what's happening here, and I talked about this too, why this is important, guys, if the price gravitates way up here, because this will be the first time in over a year that we are climbing, or we're taking our first step to the upside. So after being, on this downtrend here, it's a good way to look at it, actually. Because, yeah, we start to see the price action increase. We break these levels of resistance and stuff, but these aren't confirmations because the price comes back down. Us coming up here, this is why this week is super, super important, okay? Us coming up here, this is going to be the first time where the price action ends above, okay, all other quadruple witching dates and their price levels, okay? If we come up here, back here, we ended quad witching at $16, okay? So this week, if we go above $16, that will be that first step we need to come back up, right? If we don't do that, then we're going to be pretty damn close. I mean, you're starting to see this curve, guys, take action here. So, I mean, even if it's around the same price or even lower, we're still making that curve, and this looks pretty damn good to me. If we were lining these up on every quad witching date, this one lines up at the $43 level in September. So at least there's confirmation here that this trend is turning bullish, right? It's a pretty nice way to just understand, what's going on here with Amy's price action before quad witching. And all of these did have V reversals prior to that quad witching date, except September. But September of 2021 just had a pretty bullish, this was right after this arc that we had made, right? And there was pretty heavy price action happening here. So a lot of volatility, not much going on in the dark pools as we have going on down here. So I think this week we will get, a V setup, but really, really early on in the week. So on Monday, Tuesday, and then we'll come back up, right? Hopefully to reach this level at around 16. And then after that, guys, the point of interest is the 22nd. So we'll see what happens. And we'll go from there, right? We'll track it. This thing just moved. Okay. All right, so this is the quad witching chart here. We also have this, I haven't posted this yet, but this is the something I've been working on here for a little while. I did post it on Twitter, but it was very brief. A lot of people were asking what it was. And this is a it's the parallel zone that we had talked about back here that starts in February of 2021, or of 2020, I'm sorry. So this parallel zone, and I'm going to take away this S-curve for a sec and these two arcs. So what this does, for those of you that are not aware of the parallel channel, is it's tracking this portion here 120 days apart, okay? And these are a year apart from each other. So these ranges are the same size all the way through. And what this is doing, basically, it's getting these levels for us. So this green portion and the red portion are levels above and below where the price likes to, very quickly spring back up or down. So right here, for example, right, we came back down, and AMC likes to trade on the blue zone, okay? And this is important not because, I'm drawing straight lines and they're, matching with each other. It's because these are cyclical, guys. These are 120 days apart from one another. So the fact that AMC is coming back to this range on a cyclical level means, that's a huge deal with the cycle that we are tracking. So we are here right now. We're on that red zone, and we've been here for a little while, just like we were back here, okay? And back here for a very, very tiny time here would be about almost 2 months now, right? But on the larger scale, the macro scale, it looks like very quick, like this would come back up. So here in the short term, what could happen is, I personally don't see us coming back down here. There is a possibility that does happen if the cycle plays completely inverse, guys, and we don't come back up here to 22. If we start to climb back down, there is a possibility that we come right outside this zone, just like we did back here, very quickly. But then what happened after that? Well, this is exactly what happened, right? We had a massive run-up. And this, okay, would be the alternative scenario to the July point of interest, okay? If the price stayed down here, it would be acceptable for AMC to run the same way, because the price action is a lot lower. We're dealing with dollars again, single digits. So it's not the same as, these guys are trying to keep it on this range on purpose. They don't want people FOMOing in right now. And the reality is that retail likes to buy cheap. Okay, so they're going to be looking for single digits compared to double digits and, triple digits. So this would be an alternative scenario if things are not playing out how we see them to. We also have the other scenario as well that could be the GameStop, type of squeeze, where you have this broadening wedge that also lines up on that October time. But right now what we're tracking is going to be that late July, early August. I think it makes the most sense with contracts, the option contracts and the cycle right now. So that's what we're going to be tracking. But, it's good to consider every perspective and all the options that we have, because, again, nobody can tell you, right, like specific, price targets and stuff for the squeeze. Like, I would never tell anybody, where I think the price is going to go as far as like a level, because I don't think that's something you can calculate. But what we've been doing here in this channel is we have been finding volatility zones on many stocks. So, that's something I'm going to keep doing because it's working. And I think it's important that even if you give yourself upside or downside on that volatility zone, it's still pretty accurate on the ranges that we track. So it's a good thing for sure. Let's see. Zach Cates, what is good? So blue zone this week. Let's see. Based on this parallel triangle, that is what I'm looking for. Yes, I am looking for the blue zone. So you can see with this cycle curve, it does call for some blue zone and some upside here. But again, consider every perspective that you can here, just because in the past this thing did come back, out of this channel, and that's okay. Even if it did come back down here, guys, we wouldn't be far too, far away from the next major run up. This is basically that cutoff line for me. I don't see them pushing it below this, and we've said this many times that October would be basically the final straw here. Yeah, at that point, guys, it would be really hard to see like where we're gonna go from there, because these guys would have beat the price down multiple times and succeeded to do so. So, but again, I'm very bullish right now. I don't think that's gonna happen. So I am looking for this range here in the short term. All right, Matt, what is good, man? Smoked potato. What options? So I do. For those of you that are just coming back in on the channel, I just updated the website. It has a cycle tracker available. It is a premium option, but I'm using Patreon for that. Patreon will be updated every day. There will be a lot of things I'm going to be posting on there, guys. It will have the option strategies that I'm tracking on the cycles according to their point of interest and the nearest point of interest. I'm not going to be posting options like all the time, every single day or every single minute or whatever. I know there are people like that do that, but the strategies here are meant to be very specific and it won't be a broad selection or anything like that. They're very specific because they're tracking points of interest and cycles on the best possible time to get in on something like that, right? So it is carefully studied, I guess you could say. So I will be providing that, and then the cycle tracker, however, that will be a daily update that you will get, and they have right now I have 6 that I have on, and I will be adding 3 more tomorrow morning. So check that out. Check that out if you want. It is on the website on the link below, and it will have a lot of different updates and stuff that I will be adding in the short term. All right, guys? For sure. Bro, this Ken Griffin guy, man, you are funny, bro. You a funny dude. Juan, what's good, man? All right, I'm going to go back here and see if I can answer some questions from... Alright, full show. So we dip on Monday, Tuesday, and then go to Uranus. Hey, man, potential. Yeah, that's what we're looking for. We're looking for a short-term dip, spring, and let's go, baby. Let's go. Let's get out of here. That is exactly what we're looking for. Yes. Yeah, dude. Based on the monthly chart. If you guys saw the monthly scenarios I posted on Twitter, the one that I liked the best was the middle one. Obviously, I did put the June one because I wanted people to see why that looked incorrect, right? The June run up that we had on the monthly chart scenario there was like literally just in a straight line up like that with no levels being met, nothing being crossed. And it was something that, that we had talked about here, how the June 3rd was used as a it's a psychological game these guys play, right? They're trying to overhype an event that it just was too predictable, right? The executive order and all that lined up, everything was just too predictable for that date. So we weren't looking at anything happening then. And I wanted to make that clear, guys, with that projector, so you guys could see that. That's why I post these scenarios and these weekly scenarios, is so you guys can see, you know, it's one thing to drop like lines and, you know, these little paths and stuff, you know. It's one thing to do this, and it's one thing to actually see the candles in play, right? It gives you a better perspective, I think, to, you know, to understand how the price action can move. Sometimes we just got to see things, you know, already happen to make better decisions, I guess. So I do that on purpose. It's fun too, man. I love fucking working on that shit, doing all the editing and stuff. But yeah, man, the projector pattern is at play right now, and you guys are, I mean, you're looking at it, dude. This thing is ready. It's your typical projector right here. It's your typical projector. And, you know, end of July is what we were calling for here. So something like this just looks, that looks healthy to me. Like, if something like this were to happen, and I'm not calling for 120 or just ignore that. If this were to happen, okay, I think it would be acceptable on the TA book, right? We talk about how, yeah, AMC is not a play. Like, a lot of people think that, you know, it doesn't follow TA or anything. I think TA is used for, you know, it's used for the benefit of these institutions controlling the price action, not for retail, because, you know, they want to make you think that because a chart looks a certain way that it's going to play out a certain way, right? And we talked about how, you know, I use this example a lot here, but what happened back here when we broke down of this pennant, right? There was a couple of different patterns that we had playing out here that could have played out. At first, we had, you know, what the Wyckofian stock was like a spring, right? Where you're gonna do a spring and then just go up. We also had an inverse head and shoulder setup that didn't play out. And then we also had what could have been this right here, that a lot of people were thinking more of like a cup and handle sort of deal, but this ended up being a wedge, right? A wedge that broke down. So there's a lot of different patterns that just, you know, they look a certain way one week and they're something else the next week. So it's really hard to, you know, put all that faith on one pattern, but eventually the pattern is going to be in your favor. And I think these hedge funds are going to make sure that, you know, as long as a price action is somewhere where it's being respected on, you know, looking at the monthly chart, you can, like, guys, the monthly chart is super bullish, is like super bullish, and this is a technical play right here, right? We call it the projector, but this is a support trend line, okay, that is being respected on its way up, okay, and there's actually a term for this in Wyckoff, and I think it's somebody sent something, man, on the Discord one time, and I was looking into that because I thought it was pretty interesting. But there is a certain term that Wyckofians use for this sort of pattern that we have here, and it is, guys, a pattern that you find before every major run-up. I mean, we've seen this before many times with all of these run-ups that we've had. Okay, here's a projector. Okay, and if if I take this projector here, okay, and I hover it right over the current one. Now, some projectors are gonna look a little bit different, right? This one hovered right over. It didn't completely come back down to test the level of resistance back down here. It just sort of hovered right over and then went. The macro projector on the monthly chart looks a little bit more like the November run-up that we had. But what I'm going to do anyways is I'm going to take this one just to show you guys here what we're dealing with. I'm going to do that, and we're going to go on the monthly here. Let's get it. Okay. Again, this one is, every projector looks different, but you understand the deal here, right? You have a low, okay, it comes back up and then comes back down before making that high, right? So one thing to consider, guys, is that you don't want to follow these smaller patterns, okay? On a larger scale like this, I would never try and track something on the monthly chart, the weekly chart, even the daily chart. I would not use patterns because you have to consider that with patterns here, guys, the time frame is very important. And when you're converting fractals and you're using something so small like on a 15-minute chart, trying to convert that to a monthly chart, that's almost impossible. You can't do that. But what you can do is you can kind of compare them and see, how things are looking here. I think that this run up here is obviously going to be a lot quicker. These candles behave differently on the monthly chart, but it is going to be a lot quicker. Let's go on the 3-day. Kind of get the deal here. Okay, up, down, and then we go, right? Very similar setup. It's just it's a pretty chart, man. It's a pretty chart. It's ready to pop. It really is. It's ready to fucking pop. Right? A, M, C, baby. Pop. Pop. AMC. Let's go. Let's see. Bitcoin. Yeah, let's look at Bitcoin. Well, yeah, Bitcoin. Oh, yeah. 25,000 right now. It's about to... Yeah, this thing is about to just free fall, and it's gonna dip, dude. This is gonna dip pretty hard because it's about to cross a major level back down here. Again, we are looking for Bitcoin, guys. If you are tracking crypto right now, what I'm looking at is, let's go here on the daily. The level that I'm looking at for like a low is going to be around the 17.5. From there, we should have a pretty nice breather to the upside, like a nice relief rally for a while. And then, I just don't see it going lower than that, to be honest with you. But if it does keep going lower, then there is going to be like other levels, like possibly even 10, maybe even 8 or 9. But right now, what I'm looking at, the first level is going to be 22. And the second level is going to be 17. Okay, and there should be a heavy spring, like a heavy fucking spring. Like, you're gonna see some shit like this, dude. Like, it's gonna be bad. It's gonna be nasty. It's gonna be so nasty. And this would kind of make sense, too, because, like, if the market is expected to rally, or at least what I think is the market is expected to rally here in the short term, it would make sense that, Bitcoin goes first. Obviously, Bitcoin's going to dip a lot quicker, a lot faster, and then it just fucking pops back up here, and then we trade here for a little while before fucking doing something else, dude. I don't know. First we gotta take it. Yeah, we gotta take it day by day, see what's going on. But yeah, that is what I'm tracking, guys. 22 and then 17. Let's see how 17 looks. 17.5 would be right there. And I think the spring would probably bring it back up here. for a little while, back to 30. I mean, just imagine that the people that are gonna fucking 100x this shit, getting at 17, and then this thing just fucking pops back up here to like 32. Oof. Somebody's gonna make some money on that. See how quick it does it, though. Typically, if you get in on these wicks, these nasty wicks, which always tend to happen at like 2 in the morning, then, you know, you find that low, that fib level that you're looking for, and you find that low, this will spring back up very quickly. So there's still nice gains from that, for sure. I say the spring, let's say it's at like 17.5, and this thing springs back up to, I mean, dude, even if it did spring back up to like 23, which is this, that would be a resistance, which I could see happening. That's like 35% right there, dude. Jeez. All right. Well, there you have it, man. There you have it. What are my thoughts on GME stock split as far as it actually causing shorts to closing out? Yeah, no. So there are certain catalysts that, and this is my rule, really. It's like 9 out of 10, you know, catalysts do not affect the price action in your favor, in retail's favor. But then there's that one catalyst that does. And that one catalyst is typically what, you know, sends the price action to, you know, come back up here. So it's very possible that whatever happens here in the short term with the GME stock split, that does happen to, you know, align with a volatility zone that we're tracking, and you know, causes shorts to you know, this ripple effect in the market that will not be controlled by the cycle. The cycle, guys, is controlled entirely by the, you know, the composite man that's controlling the price action. If they are, you know, not them specifically, but if, since they're letting shorts sort of get away with this for a little while, even though they know they're screwed, but they're, you know, I say this, they're playing this puppet show between retail and shorts. It's going to be out of their control, and they're just going to shrug it off, be like, okay, well, we're going long now, right? If there is a ripple effect in the market that causes shorts to cover, the algorithm will not be cycling anymore. You're going to get something like this in the cycle. It's going to be error in the cycle. It's out of the cycle's control to stop those types of catalysts from happening, right? So this is why I say that volume is very important, because once they open the gates, okay, once they open the gates for, on the projector pattern, typically is when it happens because they let the price action run, and then they heavily have to stop it, right? You have this wick here that wasn't supposed to happen in the algorithm, but it still did, and very quickly it came back down. But yeah, once they do let that happen, if things get out of control, the cycle will not be able to stop it. Then yeah, you will get the squeeze. And we know that, though. We know that at some point when the squeeze happens, that we're not going to be able to track it anymore because there won't be a cycle. It's just going to be a ripple effect taking down all of the algorithms that have been controlling the price action, right? So yeah, man. I guess it's a waiting day. That is going to be that one catalyst out of 10 that plays out, right, and slaps a cycle in the face, which is good, is what we want, right? But in the meantime, we're tracking the cycle and the short-term points of interest and how things are likely to lead that way to where they can't stop it anymore. Also, guys, make sure you slap that, you know, that like button real quick. We got 57 likes in here and like 150 peeps in here, man. What is up? Slap that ass. There you go, 62 likes. There you go. Get it to 100, bro. Get it to 100. No, I'm just kidding. I mean, dude, if you can double slap that shit, do it. Derek, what is up, man? Oh, shit. Oh, shit. Okay. Oh, shit. Smash the like. Oh, yeah. Smash it. What up, homie? JM Ass. What's up? Triple slap. Oof. All right. Look at that. Yeah, I'm gonna pull up just because, and this is not one that I'm tracking, guys. On the cycle tracker, I don't have Redbox, and I'm gonna show you why. Because Redbox is at the same, it is at a very vulnerable spot. I'm gonna show you right now what I think is gonna happen here in the near future. Okay, with Redbox, if you guys are in on this, I don't think this is a squeeze play. I think it's just like all the other ones. Oh, I'm on crypto, that's why. Alright, so you guys see this right here? You could see right off the bat, this played out completely inverse. Okay, on this pattern right here. And you could see that because if I flip this right here, okay, you see that the price action now took a turn to the upside. So what do we do now? So this is actually expected to be hitting the 17. I think the top that I was looking at was 18 or 19. And then it's going to break back down. But I'm trying to see what levels and what pattern I was looking at. Yes. So the levels that I found here, based on the patterns that I was tracking, is going to be that 19, maybe 1850 level. I don't see this crossing 19, but I think this is a it's a short-term bull. It's a short-term bear trap. From the looks of it, this is going to continue to go up. Yes, I do think it's going to go up to like 1850, but after that, this thing is going to dump, and it's going to dump all the way back down to probably $5, probably even below that, because this thing has had no breather, absolutely no breather, and dude, a couple months ago it was trading at $1.50. Like, this is a scary fucking play, very fucking scary play. But based on the current setup, yes, I do see it hitting 1850 and then coming back down very quickly. I'll do a update on this on live stream tomorrow. I'm just gonna look at it a little bit more. I was looking at it on Friday. I don't know where that chart is. It's not on this one though. This is another setup here. It might be on the cycle tracker update here that I had. What's going on with... What the hell? Yo, why has this screen been like this for a while? Bruh. What's going on? Why is the screen like fucking frozen right now? Alright, give me a sec. I don't know what the fuck's happening. Okay, there we go. Sorry about that, guys. I don't know what happened there. What the hell? Okay, whoa. There we go. There we go. Show me, brother. Dude, last, I don't remember when it was, but it was a day AMC was like ripping. It was fucking ripping. And we were having a rally here, and I got shorted to the ground with the stream. I don't know what they did, but it just, my internet was just not having it. These guys. Oh, man. This guy puts on TWE's program. Twee, man. Alrighty. Yeah, alright guys, we are gonna cut the stream, but I will be live tomorrow, so make sure you check that out. Stay tuned for the weekly scenario. Also, if you guys want to do the cycle tracker, make sure you check that out on the website as well. Alright guys, I will see you soon. Stay tuned, man. Love you. Bye-bye.